Guys wanted a video on options trading and I told you I would do it, but it would be on my Robinhood app. It is the easiest one to learn. It is the easiest one to teach. If you haven't had options trading turned on yet, you will have to go to the bottom right hand icon, the little guy right there. Click it. At the very top left is the settings button. You're going to want to click that. Then you're going to want to click investing. You're going to want to go down all the way to where it says options setting. Mine is already turned on. It is already on level 2. I don't remember the exact process of what I have to do to turn that on, but I believe you will start with level 1. You're gonna need level 2. It will ask you a series of questions. It's going to ask you how long you've been doing the options trading already. It's going to ask you what your risk tolerance is, and they're looking for specific answers because they want to know if you're mentally capable of doing options trading, because it is not like holding a stock. It's kind of like placing a bet, and you could lose all the money that you place on that bet. So I will let you try to figure that out. If you cannot figure this out, go back one and go all the way down to, you're going to want to find Robinhood support. Click on that. I would say first, try to go to your support chats. And there aren't any, so you click get support. The next would be probably investing, options. One, I think you can just go to can't submit a new order, because you can't, because it's not on yet. And next, you can either call them, they'll call you within 30 minutes, or you can chat with them, and an agent will be with you within 3 minutes. That is pretty freaking awesome. If you don't like talking on the phone, you can do it that way and ask whatever question you want. You want to tell them that you want to turn on options trading. I've talked to them on the phone before. They picked up the phone actually pretty quick, and I was able to ask them whatever I wanted. They gave me the answer and helped me out. So definitely a good tool to have. I will let you set up your options trading account, and then when you're ready, I will show you how to do options. You can pause the video now and then restart it just after you're done. All right, now that you have your options trading turned on, let's go down to, and we're going to use AMC because Mullen has just recently had a reverse stock split, and the numbers are still kind of screwed up right now. So we're going to go with AMC. We're going to go down to the bottom where it says trade options, and they have expirations dates right here. There's May 12th, May 19th, May 26th. It's every Friday. And you can pick whatever date you want. I like to go at least 3 to 4 weeks away, depending right when I get into the trade, what my outlook is for that trade. If I believe that it's going to take perhaps even a few months to get to the price that I want it to, then I'll go further. The further you go, though, the more that you pay for it. Let's go to July 21st. Here you'll see that a $6 call, the price right now of the share price is 5.86. A $6 call is 0.67 cents per share. When you click the plus sign, you're saying that you want to buy that. And if you can see here, it says 0.67 cents, but max cost 0.67 shares times 100, because every contract is 100 shares. So you're actually paying $67. So when it says 67 cents, it's in dollars that you actually pay, because it's times 100. Now this call option right here, it expires on July 21st. I have until then for it to get to about $6, maybe higher if it does. You can hold it as long as you want. You can sell it whenever you want. You can sell it when it runs up just up to, say, let's say it doesn't go to $6, it only goes to $5.99 or $5.90, and you're up some money, you want to sell it. You're not going to be up much, but you can definitely sell it. Be careful not to sell it on the same day, because that will be a day trade. All right, and now you're going to want to click where it says limit price. Bid is 65, ask is 67. You always want to have those two numbers pretty close to each other, because when you're ready to sell, it'll execute a lot faster than when that number is much bigger. When you click on that, you will see all this information coming up. You want to always look for the open interest and volume. You want to make sure that those numbers are pretty high and this one is pretty good. That means that people are interested in this one and there's people buying this call option. And that is what makes the price. You definitely want to have volume. That is what's going to drive the price, and that's what's going to drive profits or losses on this. But if, like I said, if you believe that AMC can make it to $7 by July, then it's a pretty good bet that you will make some money on this. There's no guarantees ever. The price could drop for whatever reason, being shorted or whatever reason at all, and you could lose that $67. Now, I am not a pro in options trading. I am not. I know how to do them. I've made a lot of money on them. I've also lost some money on them, especially when I first started out. But when you buy a contract, a call, or a put, whatever you pay for that contract, whether it is a call or a put, you can only lose the amount of money that you put in. So if you paid for one contract, $67, you can only lose $67. But the profits that you can make are endless depending on where the price goes. When I was in AMC and it squeezed and I had calls, I made up to $3,000, even $5,000 on each call. Also, if you have a call, a $6 call, and the price goes up to $6.50, you are 50 cents in the money. It is called in the money. You can then exercise the call. When you exercise the call, you have to have the amount of money that it takes for you to buy those 100 shares at $6, what call you bought. And since it's at 650, you're 50 cents in the profit for each share that you bought. You can choose to exercise a call at that point, or you can sell the call. I usually sell the call. I don't want to hold the shares. I usually have shares holding already, and then I buy the call. Let's go ahead and go back one and see if I missed any information that I haven't told you yet. Go back one more. And right here where it says $6 call, and the break-even price is $6.66 for the date of July 21st. So by July 21st, if it is at $6.66 and that at the closing day on that Friday, if it is at that, you break even. You do not lose money, you do not gain money. And keep in mind, I am telling you to the best of my knowledge. I am not a pro at options trading. I'm just telling you how it works, how I do it. And just because you don't know every in and out about it does not mean that you can't do it. But it is good to learn every single thing about it. And there are plenty of YouTube videos out there. So if you want to learn more, please do Google options trading, how to do options trading, or look it up on YouTube. It always comes up. It'll tell you step by step. That is actually how I learned. And my brother, he did options trading and he taught me how to do it, but he didn't teach me everything. And even with the limited amount of knowledge that I have on it, and I believe it is pretty good knowledge that I do have, I know how it works. And you kind of have to give it a try to really see exactly how it works because you need that experience. But I would go with a much lower stock price. That way you do not pay as much. And the best way that everyone says to do is to go paper trading first and do option calls that way. That way you know exactly what you're doing before you start spending money. Now, a lot of people say to do that. I haven't done that. I learned the hard way. I lost money, like I said, and I also made a lot of money. So I've learned it that way. The safest thing to do, in my opinion, is to just buy shares and swing trade, day trade, whatever. Remember, you cannot do more than 3 day trades per 5 consecutive days. And that's 5 trading days. So that is the way that goes. If you believe that the stock will go up and you want to hold for a much longer time, you could go all the way over to June 20th, 2025. If you click that, you will see that a $7 call is what they have available. But now, instead of being 67 cents, it is $1.35. If you click that, you will see that it is $135 to buy that call. And this option call here gives you about 2 years for it to reach that price. Now, if you believe that AMC might squeeze and it'll go to $100 or whatever you might believe, you can definitely buy this call, and when it squeezes and it goes up that high, this number will go up very, very much. For every dollar that the price rises, your contract call will go up by $100 in profit. So if it goes up $10, you're going to make $1,000 on this call. And they do add a percentage based on volume for the call, so you can actually make more than that. Now, what you can also do, and we're going to go back over here, what you can also do if you want to pay a little bit more money and you do believe that for some reason you really, really think it's going to go up to $50, $100, and you just want to take your chances and get a $17 call. And even if it might only go up to $20 and you believe that it'll go up there naturally without a squeeze or something like that within 2 years, you can buy that $17 call for $72. And if you wanted to spend a little bit more money because you want to get extra contracts, you can get as many contracts as you want. You can get 5 contracts of that exact same call for $360. And that means that for every dollar that the price of that stock goes up, you will be making $500 this time per every dollar that it rises. And as you can see at the bottom here, max profit is unlimited. Your break-even price will be $17.72. That's what it has to be within 2 years in order so you don't lose any money. And your max loss can only be $360, the amount that you pay for it. So at first, when this happened, I didn't know how much I could possibly lose, and I was a little bit freaking out until I found out that you can only lose what you buy it for, but that only goes for option calls and option puts. I do not use the spread calls, or I do not sell spreads. I don't know how to do those, so I don't even touch it. I do not short stocks because if I think it's going to go down and it starts going the other way, your losses are unlimited. We don't know how high a price can go on a stock, and if you're shorting that stock, it's going to keep going up. And at that time, because you borrowed the shares to short them, to sell them, you have to buy them back, and you are paying a fee for every day that you're borrowing that share, each share. So if the price goes up by $10 per share, you have to buy that whenever you're ready to cover. You have to buy it at whatever price it is right then, and you could lose a lot of money. It is not worth doing, in my opinion. If you are a professional and you believe you know what you're doing and other people and all of that, then go ahead and do it. But I will not touch that. It is much too risky. I don't like to play with margin money. I don't like to gamble with things like that where I can lose unlimited amounts of money. I just don't want to be that guy. All right, once you buy the option call, and I can't do it, I don't have enough buying power to do that, but once you do that, it'll show up over here in your main list. One more back, and it'll show up right here. I have all these calls right here. I have some puts also, but I have all these calls, and I put it on to show me the total return. As you can see, I'm down on the calls for Mullen because I had the 50-cent calls, and after reverse stock split, the numbers got all fudged up, and whatever he did, also it went down quite a bit. So I'm down on those, but I will hold and wait for those to come up. On a lot of them, I do have a year, or I have until September to sell or figure out what I want to do. So hopefully it rises by then. If we squeeze, I believe I will make a lot of money. And I also have some calls that I'm up on, but it's not very many. My $1.5 call, I'm up $200 on, and I'm also up $10 on my $2 call for 512, and I have 10 contracts of that. If you do have any questions, please ask me in the comments below. I always try to get back to you, and if it's something that I can help with, I definitely will. Also, the other thing is that if you have any question at all, Robinhood is pretty good about getting back to you and answering your questions. And I'm sure it's the same for whatever brokerage you're with. If you call them and ask them questions, they're pretty good at everything regarding options and everything else. So I think they can teach you or tell you, explain to you exactly what you need to know. Another thing I wanted to cover with when you buy a call and say it's a week away and you buy it at 586, let's say it's a $6 call. If it stays at 586, the price stays right around there. It doesn't go up, it doesn't really go down. The closer you get to your expiration date, the money that you have in your call will go down, because with that theta decay, your money is also decaying because you're getting closer to that expiration date. And if it starts to go down, that money in your call could definitely be in the negative pretty quickly. So I like to sell it at least 3 days before the expiration date, unless I believe that for some reason it's going to go up. For I don't know why, but for some reason it might go up, and you believe that no, it will come back into the green and I'll make money. But I don't like to take those chances, and I usually sell the calls within 3 days of expiration. I do not hold it past that because you just never know what's going to happen. And sometimes it's better to take a small loss than to take a total loss. Now, I hope that any of you guys are not taking this as financial advice. I'm just showing you how to do calls. In the end, you have to choose what call you want to buy, what strike price, what date you want to put on that, how much you want to pay, how many contracts you want to buy, because in the end, it is your money. You have to make those decisions. And I'm not a pro trader. I'm just showing you how to do option calls. And like I said, if you want to further your knowledge, please do look up on YouTube options trading. Learn the charts, learn a little bit of everything of when it might be a good time to get in, when it looks like it's a bottom, it's about to hit support, it's about to bounce, and when to sell. It's always good to have a good strategy getting into a trade, but also getting out of the trade. I hope that this video helped you out. If it did, leave a comment down below, leave a like or something like that. Please let me know, and I'll continue to make more videos. Hopefully I can do something that's a little bit quicker. These did take a little bit of time because there's a lot behind it. Anyway, I wish you guys luck on your trading. I hope you guys all make a lot of money. Thank you very much for supporting. Thank you for watching. I'll see you on the next one.